While most investors were watching tech stocks drift sideways and the Federal Reserve whisper about soft landings, something explosive happened in the silver market. In the last 72 hours, the price spread between Shanghai and Western markets didn't just widen, it blew out past $13. At the same time, Shanghai physical silver printed prices as high as $104 an ounce. Let that sink in. While the paper price tells you everything is calm, the real market just screamed that the system is breaking. And here's what they're not telling you. Spreads like this don't appear unless someone is trapped. What I'm about to reveal will change how you look at silver, banks, and the financial system itself. Because this isn't just about metal. This is about control failing in real time. And the biggest revelation is coming later. When you see it, you'll understand why this changes everything. Now, you might be thinking, I don't trade silver. Why should I care? Here's why. This directly affects your savings, your purchasing power, and your future. When physical prices detach from paper prices, price discovery stops being honest. And when price discovery breaks, currencies are next. You live inside a system built entirely on trust. Trust that markets are liquid. Trust that prices are real. Trust that banks can deliver what they promise. But when Shanghai is paying over $100 for silver while Western markets say it's worth far less, that trust disappears. And once trust breaks, it never breaks quietly. Pay close attention to this next part, because what's happening right now is the early stage of something much bigger, something most people won't recognize until it's too late. This isn't the first time this pattern has appeared. In 1971, gold spreads widened before Nixon closed the gold window. In 1980, physical silver vanished while prices exploded and exchanges changed the rules overnight. In 2008, credit markets froze while official prices pretended nothing was wrong. History doesn't repeat, but it always rhymes. Every time physical premiums detach from paper prices, it ends the same way, with a violent repricing. The data proves it. In 1979, silver premiums went into double digits just weeks before the blow-off top. In 2020, gold premiums surged before paper markets failed and spot prices gapped higher. And now we're seeing the largest east-west silver spread in modern history. Same pattern, bigger scale, faster timeline. Think of the silver market like a warehouse. On paper, there are receipts everywhere, contracts stacked on contracts, promises layered on promises. But in reality, the shelves are getting empty. Shanghai trades physical silver. London and New York trade claims. Right now, the physical side is screaming scarcity. The paper side is pretending supply is unlimited. Over the last month, Asian industrial demand surged. Chinese exchanges quietly tightened delivery conditions. Western vault inventories declined again. Quietly, steadily, consistently. At the same time, banks kept selling paper silver as if nothing had changed. Here's the problem. Buyers stopped accepting paper excuses, and that's when the spread exploded. This is what's happening behind the scenes, and it's accelerating. Here's what they don't want you to understand. Banks are structurally short physical silver, not just on paper. In reality, they rely on rolling contracts, cash settlement, and delayed delivery. They rely on the assumption buyers won't ask for metal. That system works until physical demand overwhelms supply. Once that happens, the system locks up. This is the part that should concern everyone. A $13 spread should vanish instantly through arbitrage, unless the metal can't move. And right now, metal isn't moving. That means silver has been sold that cannot be delivered. When delivery fails, there's only one exit: price. This is why the situation is unsustainable. In the last 30 days, Asian physical premiums surged into double digits. COMEX registered inventories declined again. Major bullion banks quietly reduced visible exposure. Analysts acknowledged regional pricing stress. Persistent Asian premiums don't match paper valuations. Nobody's talking about this, but the data doesn't lie. Over the next few weeks, expect volatility and instability. Over the next few months, exchanges face impossible choices. By 2026, this becomes a structural reset. When physical silver trades $13 above paper, the system is already broken, and what comes next will not be quiet.